morning.
Thanks for joining us today. So today we're going to talk about the differences between LLCs and S Corps and what options we have to save money, and what would work best for us in our businesses. So we have two special guests today, Ariel Sakala from Crowley & Cummings.
Hello.
I'm sure you all know her. If you don't, there she is. She's fantastic. She does a lot of work with the agents in our office. And then we have James Sullivan with Britton Company over in the, well, he's in my corner over here. He's a CPA. So between the both of them, they'll be able to answer all of your questions that you have. So when you usually ask an attorney a question, they say, ask your CPA. Well, now you can ask James because he's here. Hey, Bob Malone and Sam.
Hey, Chris,
Hi, guys.
and everyone from Keller Williams.
Hi.
Hi, I love you.
Hey guys.
Hello, hello.
Awesome.
Happy New Year, everybody.
Yeah, absolutely. All right, so we're going to jump right in. So, Ariel, do you want to tell us a little bit about yourself and what you specialize in? And then James, if you could do the same, and then we'll go from there.
Sounds good. So as Kristen said, my name's Ariel Sakala. I am an attorney with Crowley & Cummings. I've been practicing law for 13 years and counting. I started off doing estate planning for a sole proprietor, and then I shortly thereafter got into residential real estate conveyancing. So I've been able to maintain both of those as part of my practice, and also some business development, forming LLCs and helping people, mostly ancillary to real estate transactions, but also some other business formation as well. So as you probably know, if you've dealt with Crowley & Cummings, we eat, sleep, and breathe this stuff. We do this all day long, and we love it. And we love working with Keller Williams because you guys are the best.
Thank you. James?
And I'm James Sullivan. I'm a certified public accountant. I have a master's degree in taxation. I've been practicing for 15 years. I'm with the firm Britton Company CPA, and we kind of specialize in this area. Self-employed individuals. We do a lot of S corporations, high net worth individuals, real estate transactions. So that's kind of our specialty. So this is right up our alley.
Awesome. So do we think they know what they're talking about? Yeah? Oh God, you guys with your mics off, you're killing me here with the laughs. Okay. All right, here we go. Either one of you who wants to jump in, what's the difference between an LLC and an S Corp?
James?
Yeah, so an LLC it's a state recognized entity. It's not recognized at the federal level. As an LLC, basically you get to tell the IRS how you want to be taxed. And one of those options is an S corporation. One of them is a C corporation. You can be a disregarded entity. So there's a lot of different routes you can go with an LLC. The primary purpose, and I'll defer to Ariel on this, the primary purpose of an LLC or a corporation is for legal liability protection. The benefit of an LLC is a simpler structure type. Ariel, if you want to touch base on the legal liability.
Yeah, so I just want to say, I mentioned this in my intro, but James is also my personal accountant. He does all of my taxes, and I refer everybody I know to him. He is absolutely wonderful. And I highly recommend if you need to get your accounting in order and this is the year to do it, James is your guy. So I just wanted to mention that before we dove in here. But the reason why people, and you're probably all thinking this and have maybe thought about this within your own business, is what's the difference between me doing business as James Sullivan, or, being a corporation, or being incorporating as a limited liability company. And so it's like, what is the benefit of having this legal structure around you? And the really important thing for people to understand is that in both the S Corp and the limited liability company, you are taking yourself, your personal self, out of the equation, and you are limiting your own personal liability to the money that you have put into the company. So in your personal life, you may have, a couple of multifamilies, you may have 401ks and other types, savings accounts, assets, and you want to distinguish your individual self and your individual assets from the company from the business that you're doing. So when I recommend that somebody does an LLC, for example, because as James mentioned, it is a simpler way for most people. If you're just acting as a sole proprietor, it's a lot simpler of a mechanism than, let's say, an S corporation. So the liability aspect is that if I become an LLC and I'm able to actually keep my personal assets separate from the assets of the LLC, if I do something wrong in my business, my exposure is only limited to the assets of the LLC or the S corp in that circumstance. So now I am not exposing anything that I have in my personal life because somebody has sued me in my business life. So that's really the important reason why people do it. And in the real estate world, you see a lot of people do it when they're buying, let's say, investment properties, whether they're flipping those properties or whether they are going to buy a 3-family that they're going to own and operate for investment income. So you have a 3-family, you form an LLC, you keep all of the money in the accounting, the rent, everything is done within the LLC. You have one of your tenants slips and falls and has a tragic accident and they're going to sue you. Now you've kept everything separate. Now the only asset, let's say, that this LLC owns is this 3-family house. That is the exposure to the landlord, essentially, is the value of this home and any other money that the LLC is generating. So now landlord's personal assets, 401k, savings accounts, spouse's assets, none of those are going to be exposed to the lawsuit from the tenant. So that's really why you see them done in real estate. Why you also see somebody who might have multifamily properties have 4 different LLCs, because you want to limit the exposure of something happening with one property to only that property, rather than you put 4 properties in one LLC. Now the tenant can go after all 4 properties or the value of all 4 properties. So that's just a little overview of the legal perspective of why you're thinking about this in the first place.
Thank you so much, Ariel, for talking about that, because I was going to ask you, because that's part of our wealth building and investment property series that we're doing. And, having those separate LLCs for your investment properties is certainly a smart thing to do. And with that said, the LLC should be set up prior to you purchasing the property, because once you have a mortgage on the property, you can't take it out of that and put it into an LLC.
That's exactly right. And this is a common misconception. And it's something that people are like, oh, wink, wink, nod, nod. Like you buy it in your individual name, you try to get a great interest rate on it, and then you want to flip it into the LLC that you've created. That is, and people do that, but I could never recommend that a client does that, because that's a technical default of your mortgage. So that can trigger the due on sale clause. Maybe it never does, but that's certainly not a risk that you want to take, that you default on your mortgage and then all of a sudden they're accelerating the entire amount of the mortgage to be due. And next thing you know, you're in big trouble and you don't have the asset anymore. So you want to set up the LLC in advance, and you want to make sure that the lender that you're working with will allow you to close in the name of the LLC.
Perfect. Thank you.
So then from a tax standpoint, so let's back up. So if you're a DBA, you're just doing business as James Sullivan, you're just under your own name. If you're a self-employed individual, you file a Schedule C with your tax return. It's just it's an addendum that goes to your return, the income flows through to your 1040, and you go about your business. If you're an LLC, the simplest way to file is the entity is disregarded. So for tax purposes, it's like it never existed. Nothing changes. So you form an LLC, you're self-employed, you file a Schedule C, and you continue on and you file your return exactly the way before. The only difference is you put your name, your LLC name, on your Schedule C rather than your personal name. And then from there, so that's why for rental properties especially, there's no self-employment tax component. LLCs is the perfect structure for if you're buying 2 families or flipping properties or something like that. You really would not want to use an S corp for real estate transactions. There's a lot of reasons why that's not a good idea, but simplicity is one of the biggest. So then why would someone do an S corp over an LLC? So it has nothing to do with income tax. It has everything to do with employment tax. So if you're a Schedule C, and let's say you're making $150,000 a year, to use a number, that's subject to 15.3% FICA and Medicare tax. That's an employment tax that pays into your Social Security, that pays into your Medicare for when you retire. As an S corporation, you get paid two ways. It's not subject to self-employment tax. You get paid as a shareholder of the company, which is not subject to employment taxes, and you get paid a W-2. And so the beauty of the S corporation is you can pick what your W-2 amount is. So let's say, for instance, you made $150,000. You could set your wages at, say, $75,000, and then the other $75,000 wouldn't be subject to FICA and Medicare. So that would save you approximately $8,000 a year by forming that S corporation. So that's the benefit there. Now, what's the downside? It's more complicated. You're going to have to hire a CPA who's not only going to prepare your personal return, but he's also going to have to prepare your corporate return. You're going to have a payroll company, or someone's going to have to file W-2s for you. You're probably going to need some tax planning. So the numbers got to make sense where the fees you're generating as an S corporation outweigh the additional costs of 1120S, of the payroll tax filings and all of that. So usually when we talk S corporations, we want to get to some type of number where the benefits of the S corporation outweigh the additional legal costs that you have. Now, one of the things that we always talk about with S corporations is you got to take a reasonable salary. You can't just say, I'm an S corporation, I make $150,000, I'm going to set my salary at $5,000 and be done with it. There are a lot of regulations that say you have to take something reasonable for your industry. So you have to be able to support the number that you're using as a salary. So you'd have to look at and say, hey, there are other real estate agents making $75,000 or $80,000 or $100,000, and that number I feel comfortable with, and this is why. So you can't go too low. But if you can get the right disparity between your wage number and your total income, then that's the mechanism at which an S corporation saves money. And it's an annuity. It keeps going every year because every year you're going to keep making that amount, and you can keep passing through the earnings not subject to self-employment tax.
Hey, I don't mean to be Donna Downer, but I just, and I know Kristen's waiting for me to mention this as is Bob. You've got to be a broker in order to be paid on an S corp and an LLC. So if you could just mention that so we have absolute clarity for everybody.
Yes.
I personally can't speak to that. I'm not familiar with that, so that's not something I would speak to. I would rely on.
Okay, so well, I am. So it's a mass licensure law. So that, it's essentially sort of a brokerage within a brokerage. So you have to be a broker and have a broker license. And now, owning rental property is different. But if you're talking about being a real estate agent, being paid to an LLC or an S corp, you have to be a broker.
Mm-hmm. Okay. And Donna, what are the requirements to get your broker's license?
Excellent question, Kristen. 3 years of experience with at least 25 hours a week working in that business, 40 hours of instruction, and passing a test. And being bonded. You have to be bonded too.
Yeah.
So, thank you. Just wanted to be clear.
Thank you, Donna.
Thanks, Donna. And so it sounds like that is, if you're looking to be an LLC or an S corp, just as a real estate agent in your own practice, it sounds like you have to, almost like James was saying with the analysis of making enough money, or it sounds like it wouldn't be, if you're a part-time agent, it may not be in your best interest to take the time to get your broker's license, the time and money and energy, if it's something that you're not fully devoted to. Mm-hmm. And it sounds like those are some pretty high barriers that you have to make sure that you can meet before. Are there other benefits, Kristen and Donna, that you can speak to of having your broker's license that would make sense for somebody other than just, performing an LLC?
Bragging rights.
Liability. So that wasn't positive.
You could open your own shop.
We don't talk about that, Donna.
I know we don't.
We don't do that.
No. So I know we don't.
Yeah.
But probably the primary one is being an LLC or an S corp. So.
Got it.
Yeah, I agree. The other thing too is at the end of the day, at least, you're knowledgeable about this topic. And when you're working with your investors or when you start with your own investing personally, at least now you understand how the LLC works and what you need to do and when you need to do it. So it's great that we have so many people on here for this topic.
Yeah, and one of the other things, James had mentioned the simplicity between the LLC and the S Corp. Both business forms, you have to play by the rules. So you don't get the benefits without playing by the rules. So the benefit of the LLC is that it's a much you're going to go by the terms of the operating agreement. So when I help people form LLCs, we put this operating agreement together, and when you're taking action as a manager or voting as members of an LLC, you can have a written record, but it doesn't have to follow the same type of strict corporate regimen as you need to have on the S Corp side. So you need to have, on the S Corp side, you need to have meetings, you have to have minutes. So you have to show a much more stringent written record on the S Corp side than you'd have to do on the LLC side. In both cases, you have to make sure that you're keeping the money separate. So that's another attractive option for people, and especially, as James said, in the real estate world, for having that simple LLC structure where you have fewer rules to play by. Both cases, you do have to file an annual report with the Secretary of State, and of course, you have to pay them your pound of flesh every year, because otherwise, we wouldn't be living in Massachusetts.
Right.
An LLC is a little bit more expensive on an annual basis than an S Corp, depending on how many shares you have in the S Corp situation. But for the LLC, it's $500 a year. So a lot of people think about that, especially, your flippers or your investors, think about that as an insurance policy. So it's a $500 insurance policy against potential liability.
And for the flippers, it's $500 a year as well.
$500 a year. Yep. And you file an annual report, which is like two pages.
Kristen, would you mind if I jumped in, just asked a couple of quick questions?
Of course not. I would love for you to jump in.
I appreciate it. Thank you. So James, the first question I have is for you. So when you were talking about with an S Corp, you can be a shareholder and also pay yourself W-2. So we know what the W-2, the salary part is, but is the shareholder portion more about the option to take the dividends or profit at the end of the year? And you get that, and then that flows through with a K-1 into your personal return. So would that be the dividends or the shareholder part that you're talking about?
That's correct. Yep. So basically, when you're going to get a K-1 every year for your income, and then that gives you the right to receive that amount. And those are just checks written to you from the business. So you would literally, from the business checking account, you would write yourself a check for that amount, and that's not subject to employment taxes. There are characteristics of dividends versus salary. Salary is paid on usually a biweekly basis, a weekly basis, a monthly basis, and dividends are paid less frequently, quarterly, semi-annually, annually. So usually it's better if you're an S corporation to structure the payments less frequently when you're getting paid the dividends.
Right on. And so, at the end of the year, you have the choice to take those profits in the form of income. You get taxed on it that way, or you have the option of keeping that money, the profits, in your business, rolling it back into the business. And then at that point, it's not taxed. Is that right? So if we had some realtors who were looking to, maybe plan for some kind of a market shift or something like that to keep money in the business, is that the way to do it and really defer the taxation of that money?
So no, so the way the S corporation works is the S corporation calculates the income or loss on the business, and then that's passed through to your personal return, whether you take the money or not.
Oh, okay.
So it basically gives you a right to take that money out tax-free in the future. So let's say you earn $100,000 year one and you leave it in the business, you're going to pay tax on that $100,000. But then in year two, if you decided to write yourself a dividend check for $100,000, it's non-taxable to you because you already paid tax on it in the previous year.
Got it. So the corporation paid taxes on it. You're not paying taxes on it when you take it personally the following year.
You individually are going to pay the taxes on it, but you're going to pay tax on it when it's earned, not when you actually physically take the money out of the business.
Got it. Okay. Got it. Okay. And then a question I had, I guess, is for Missy. There's a lot of there's a lot of different options here and a lot of different pieces of the puzzle sort of swirling around. And I really just like to break things down to its simplest form. So I know that Missy, a couple of years ago, you had changed the way that you structure your business. And, I know that you have an accountant you work with, and you set up a payroll, processing, or you jumped in with a payroll processing company. So how hard was that? And as soon as you have that paperwork nailed down, because you have the payroll processing company and your CPA, does it just basically take care of itself, or is this something that you have to hyper manage every pay period?
Oh, great questions. And thanks for making me rethink what I'm doing. So yes, I did. I did not. I opted to not open the S corporation, but I did have to go with a payroll company because I took on a regular hourly assistant that I had to payroll. So, I mean, that's a different topic, but for any of us out here who have an assistant that we pay, we really need to be paying that assistant through a payroll company, or doing the payroll yourself. You really have to do it that way based on just what the laws look like presently. You can't be writing them a check every week or paying them cash. It doesn't work. It doesn't work. The liability is huge. So the reason why I am still dragging my feet about converting fully to the S corporation is for the reasons exactly, Bob, that you mentioned. So I feel like if I take on one more thing, I might be at my tipping point and lose my mind. So that would be, then having to manage and getting my head around paying myself differently, and then becoming an employee of my own company and remembering, to call in payroll, or maybe I just need to set it and forget it. So what you do need to do is, there are a few steps right up front, but once you do it, it's done and you don't have to think about it. You have to apply in the town where you want your business to be located. You have to get a DBA certificate and a tax ID number, and then go to your bank and open a separate account under that business so that you can then fund your payroll stream through a separate account. You cannot mingle anything with your personal funds. And I hired a payroll company, and they were fabulous. They did everything for me, including all of the quarterly filing, year filing. They would even call and remind me if I forgot to call in payroll. So it was great. It was awesome. It was awesome. To Jim's point, I still haven't really grasped the numbers to work for me yet, because I'm really at that tipping point of, is it financially worth it? It's a lot more work for me, and it's not a huge savings, but yes, I do think it's worth it, to Ariel's point, from a stability standpoint. So I think once you know what the steps are, it's pretty easy to get your head around. You just have to pull the trigger and do it,
And to add with the payroll discussion, it all depends on who you use. I mean, if you use a more reputable firm like, ADP or Paychex, it's going to cost you a little bit more, but they're going to follow up. They're going to make that phone call that Missy's talking about, saying, hey, you forgot to run your payroll. They're going to have the ability to say, hey, just run $1,000 every week or something like that. If you use like Gusto or Patriot, like in our office, we use Patriot for all of our clients. It's not very robust. If you don't do anything, nothing's going to happen, so you got to be a little bit more on top of it. The benefit is it's substantially cheaper, but if you're a one-person shop, paying, a little bit is worth that, to have that phone call, to have them check on you to make sure it's running right. Whereas if, like us,
Good morning, Dave. It's Donna Frano calling from Keller Williams.
Donna.
I got her. I got you. You.
Oh, thanks, Bob. Sorry.
She's so happy.
Sorry about that. What were you saying?
You can also use a bookkeeper. I mean, that's what we use. We have a bookkeeper that, puts everything in a QuickBooks and does our payroll every week. We're an S Corp. I find it's the best way to go.
Lisa, I was hoping you were on the call this morning because we've had a few discussions about this in the last few months. And it only makes sense.
I don't think you need it.
If your CGI is above $100,000 consistently, it only makes sense to go ahead and think about an S Corp, because as your income grows, your tax liability grows. And, even if you only save $5,000 or $6,000 a year over 10 years, that's a lot of money. And that's the difference between, you know, paying off a mortgage early or having a more cushioned retirement account, or, you know, so it's certainly worth it. It's certainly worth it.
Hey,
I have a
James,
question, if I may.
Yep.
This is in regards to if you're taking a check from your real estate sales to your S Corp and you want to use that money to buy a piece of property, don't you want to put that property you're going to purchase into the S Corp, since you're going to be taking the money from there and you want to be able to write that money down when you purchase?
You wouldn't want to. You would want to take a distribution out of the S corporation and then either put it in your name or put it in a new LLC, because you wouldn't want to commingle the whole. Remember what Ariel was saying. The whole purpose of the S corporation is we're going to build a fence around your business, so if someone sues you, all they can get is what's inside that fence. So we wouldn't want to put another asset in there to give them one more thing to sue us for. We would want to get that asset out of the business and have its own fence around it, or at least have it separate from us. I don't know if you agree, Ariel, but.
Yeah, absolutely. And you have the flexibility to be able to do that. So
You have the, excuse me, the flexibility to take income from an S Corp and use that as a down payment on an investment piece of property and still be able to write down your tax liabilities from the income you received and from the S Corp. Am I saying it properly, James?
Yeah, so you still get the write-off, whether it's in a separate LLC or held individually. So it really wouldn't change anything there. I mean, you're going to have some passive activity loss rule issues, which is a whole nother conversation for another day. But whether it's in your S Corp, or it's in an LLC, or it's in your name individually, you still can use money from your S corporation to buy a property, and it won't limit the ability to, take deductions.
All right. Thank you.
James, we do have a question from Eric Harden here about asking if a Schedule C needs to be filed for each LLC if you were to own each investment property in separate LLCs. So would you need a number of separate Schedule Cs?
Yeah, so if you're using LLCs, if we're talking investment properties, just to be clear, you'd actually file Schedule E. So for rental properties, it's a Schedule E rather than a C. But yes, you would file a separate Schedule E for each LLC, for each real estate property you own. The Schedule E is kind of set up to do so. On one page, you can file 3 separate rental properties, so it's kind of set up for that exact purpose.
Thank you. I'm new to this, so I didn't want to just intervene.
If someone wants to take a property that they already have and they would like to make it an LLC, they bought it first.
Lisa, we can't hear you. Lisa, we can't hear you. You froze up.
Oh, sorry. Can you hear me now?
Yep.
No. So,
Yes.
So if you have an investment property, let's say you have a 3-family and you bought it, but you would like to have that protection, what can you do to change that? Is there any way to change that?
you essentially have to refinance the property into an LLC.
Okay.
Transferring it, setting up the LLC and deeding it from yourself personally to the LLC triggers the due on sale clause. So it's a technical default of your mortgage. So you would not want to do that unless you were able to get express permission from your lender, which is extremely unlikely, and unless you're dealing with like a small local bank, and that's something that they'll work with you on. But the most likely course is for you to have to refinance into the LLC.
At least it can be done. That sounds okay.
Yeah. there's always a price as long as you're willing to pay the price.
Exactly.
And so, Ariel, if you go that route, if somebody goes that route, and let's say that a bank allows them to close in the name of the LLC, they likely still have to be a personal guarantor, most likely, I would assume.
Correct.
So what that means is that if they miss mortgage payments, or even if they get foreclosed on, it's going to show up in their credit report. But if somebody slips and falls, they're protected under the LLC umbrella.
That's correct.
So it's not like you just let the bank foreclose, you let the property go, and it's no sweat, to me here. There's still responsibility for you owning that property personally.
That's correct. You
You're right,
still
financially.
own, that's exactly right. So you're still I can't imagine a situation where the bank isn't going to want to have the person, have a personal guarantee. So that individual's assets can be used by the bank. The bank can go after them in terms of being a debtor on that note, but not from the outside liability.
Mm-hmm. Got it.
Are you suggesting that each property should have its own LLC?
That's really, when I go through this analysis with clients, unless the only circumstance where I'd say not necessarily is if somebody is flipping and there's maybe going to be only a very short overlap that you might have two properties in the LLC, because it's really, that you have that small developer who's, basically their operation is buy one, renovate, sell, you buy another one. And there's a lot of small developers that operate like that. So if that's your MO, having one LLC should be fine. But if you're carrying 2 or 3 properties at the same time, or you're holding them for, real estate, for rental purposes, then in that circumstance, you definitely want to have one LLC per property.
And you need a checking account with an LLC for each property.
Yeah, that's correct. Yep. So you'll set up, once you have your operating agreement and your articles of organization are filed with the Commonwealth, you get a employee identification number, and then you can take all that documentation to the bank and set up an individual, an account where you're going to flow everything through that account for that one property.
And one property is one building, not individual. Okay, it's under one name. It's one deed.
Correct. Yeah, so exactly. Yep. So if you had 1 3-family, one title, one parcel all together, that's right.
So Ariel, on that point, so let's say you buy a property to flip, you put it under an LLC, okay? Then you sell it. Can you keep that LLC there and then, maybe purchase another property, 6 months later and still use that, or does it have to be dissolved?
Nope, you can absolutely do that. And I have clients who do that all the time. So that's an easy mechanism. They keep that one LLC in play, and they are able to, they file their annual report every year. They pay their $500 pound of flesh, and they keep that alive.
Okay, awesome.
Hey, James, we've talked a lot about the LLCs and the S Corps. We brushed past the C Corps at the beginning here. I think, generally speaking, C Corps are for bigger, big businesses, maybe. What are some of the benefits or differences between an S Corp and a C Corp?
Yeah, so C corporations are generally when larger companies, like you said, that require capital funding, or businesses that want to, retain the profits to grow, like a manufacturing company or something like that. The downside of a C corporation is that you have to pay the tax twice. So the C corporation itself is going to pay the tax on the profit. So let's say you make $100,000. The C corp would pay tax on that. It would pay 21%, $21,000, and then you take a distribution of $79,000. And then you personally would pay taxes a second time on that. Right now, that rate is 15%. It could be 15 to 20% depending on your income level. So it comes out to around 30 to 40%. But so that it's going to make you pay a lot more in tax. So the C corporation is usually a real bad way to go for the most part, under most circumstances, for like a sole proprietor. Especially like historically, the C Corp tax rate's been 35%. So you could pay upwards of 50% being a C Corp. And, with administrations changing, Senate's changing, I think it's very likely that C Corp rate will raise again. I don't think it's going to stay 21%. So I usually advise against C corporations unless it's a much larger company that's trying to retain profits or has, corporate funding.
Thank you.
Yeah, of course.
James, I have got a quick question in regards to secondary home versus an investment property. What are some tax advantages of two of the different scenarios?
A second home, so this would be like a vacation home?
Right.
Are you renting it, or is it just a vacation home you're using?
There's rental involved.
Okay. So it's a complicated area. So it depends on how much you're renting versus how much you're using it personally. A property like that falls under the vacation rental rules. So basically, when you spend money on real estate taxes or insurance or interest or utilities, a portion of those gets deemed to be personal and a portion of those get deemed to be a rental expense. And then when you sell the property, you get to, capture some of those expenses that might be carrying forward. There's no, immediate benefit to the second home, unless the only real strategy that people have is, say you have a vacation home you're using fairly regularly, you can rent it for under 14 days tax-free. That's the only one that people, like say, for instance, during the Olympics in Atlanta, people might have had a second home somewhere near there, and they might have rented it out for 2 weeks just during the Olympics, got a ton of money in it, was completely tax-free. So that's the only real strategy people have with vacation properties. But other than that, it's just a standard, we capture the expenses, we call some personal, we call some business, and when you sell it, it's a long-term, it's a capital gain transaction.
Gotcha. Thank you.
Anybody have any other questions? Bernie's just asked about the what it costs to create an LLC in Massachusetts. So the answer is $500 for that. Would anyone be willing to share who they use for payroll for their LLC? That's another question.
I have a payroll company. I'll find out what it is, but it's not for an LLC. It's just for the S Corp. If it makes any, I don't think it makes a difference who the payroll company is and how it's used, whether it's an LLC or an S Corp.
Yeah, the only difference with, it doesn't matter whether it's an LLC or an S Corp. The only difference with payroll companies is what level of service you're getting. So if you're using like a Paychex or an ADP, an Advantage, those are a little higher end. They're going to give you a higher level of service, but it's going to cost a little bit more. So those for a single person company might cost you, say, $800 a year. If you use like a Patriot or a Gusto or one of those, it might cost you, or like a QuickBooks payroll, that might cost you, $30 a month or something like that. So it's cheaper, but the level of service is substantially less.
Rick, who do you use for a payroll company? Rick, Lisa, R&L.
I'm sorry, go ahead.
Hi. Who do you use for a payroll company? Bernice wants a high level of service. Who can we refer to?
We used Paychex in the beginning, and now we just use an independent guy who is our bookkeeper. It's much cheaper.
Much cheaper, easier. You have someone to talk to. Does all our, gets everything ready for our accountant every time we are, when taxes are due. We don't have to do anything. He puts it all together. It makes so much sense.
Yeah, we're S Corp.
I mean, this is, and what is so funny to me is, Keller Williams wants us to, act like a business, and most people just go from paycheck to paycheck, commission check to commission check. So it's kind of crazy.
The best thing we ever did, just taking a weekly draw, and all the commission checks go into the account, operating account, and maybe take a quarterly distribution.
Because typically, you get a $10,000 check, right? And then we spend $10,000. But with you, you're putting 10,000 in and only taking, a percentage of that a week. So you have more control over that.
Right.
Yeah.
Rick and Lisa, can I ask you a couple of questions in that regard? Being a team, how does the market center then pay you? And then how do you fund your payroll account? I'm just interested in your logistics.
A what account?
The payroll account.
We
Your
just use
payroll.
one account.
Yeah, we have an operating account, and that we run payroll through that, but they pay the R&L Home Team LLC. They don't pay Rick Murray or Lisa Axios.
Okay.
We are 50-50 owners of the LLC. So yeah, it's pretty simple. I mean, I wish I did it a long time ago, to be honest with you. I think everybody should absolutely do that. It just helps for taxes. It just makes, it just keeps, there's no commingling of personal funds with business funds. And that's where you can really get in trouble.
And you can use, your debit card, or if they give you a credit card, you can use that for everything. We use it for gas. We use it, sometimes, you might, have a landscaper at your house, just saying, but, it could be a client's house.
Yeah, we run a lot of things through the business, and, not many people can live off of, let's say $1,000 a week. But if you eliminate some of your everyday business expenses like gas and your cell phone.
You're paying taxes twice.
Yeah.
If you're paying taxes, 2 times. So if you can put it through your business, and then, you're not paying it again when you're using your personal.
And we use QuickBooks, so on tax time, we just give the P&L to the accountant, and it's much easier than it was being an individual agent who didn't have LLC.
It's an S
Yeah,
corp.
that's a good point, and something that James mentioned earlier, but it's worth repeating if some people didn't maybe catch it the first time around, is these are pass-through entities. So with the LLC, and S corp can act the same way. You're not filing a separate tax return for the business. So the profits and losses flow through to you on your personal income tax return. So it's a simplicity aspect that makes it very attractive and user-friendly. And there's also, and I don't want to get too bogged down in this, but for those people that have their estate planning set up, there's also a really easy way to integrate. If you potentially, like, you have a revocable trust set up, your revocable trust can actually be the member of your LLC, so that you are, as trustee of your revocable trust, are the member of the LLC. And the benefit to that is there's already a succession plan baked into your trust. So if something happens to you, there's a successor trustee named in your trust that can jump in and act as a member. So again, not to get too bogged down in it, but it's another way that you can integrate and make sure that you're kind of putting the pieces of the puzzle together, so that something happens to you, you're able, your profits and losses of the business are still going to flow through to the beneficiaries of your trust. So let's say your spouse and your children.
Good stuff. Thank you, Ariel.
I use a company, if somebody needs, called One Check. I think they're out of Taunton. They're the ones that do what needs to be done for the IRS and people's employment.
And then Julianne asked, how do you find an independent bookkeeper? So Rick, how did you find your person?
Use James Sullivan.
There you go.
No, it was a referral.
Yeah.
And he became a client.
Yeah, that's all this house.
Sold his house. But yeah, I think Lisa's accountant referred him.
Awesome.
I know there's also like a QuickBooks Pro Advisor site where you can get people that do those types of services. And then James, do you often have people that have like the bookkeeping component, but then they'll ultimately, the bookkeeper or accountant isn't a CPA, so they put all the data together, but then they provide it to you to do the returns?
Yeah, that's our typical setup. So typically we have a bunch of bookkeepers that we recommend that would do the bookkeeping work, and then that keeps our fee down and their fees less, and we can work together on it.
There you go. Call James. He's got some referrals for you.
Nice.
Awesome. I just had something in my head and now I lost it.
I have another question. If there's a certain point that I'm still going back to the owning each property under a different LLC, because that would seem to be, if you get to a certain point, you're going to have a lot of different checkbooks. And when we do our work here now in the office, if there's a bill to be paid, it's lined item under each property. Health insurance is lined item for me. My check that I take weekly, anything that gets done here in the office, whether it's paying on a car, even buying postcards, stamps, is all line item in the QuickBooks. And we just monthly give it to the accountant to line up. Is there a point where I don't know, is there a net worth when you cut off and it goes into a different direction? That you don't need LLCs for every property, or just one grouping? You can move it around.
Well, I think what you're explaining, everything that you're explaining is done under it's done under the real estate business. Is that right?
Well, it all comes back to me anyways, because it flows through the S Corp, and then individually comes back to me in some respects. I don't have any LLCs. I have a couple of different trusts, and I have one S Corp. That's the main function of this all. As I said, I take checks from Keller Williams to that S Corp and then use that money to fund purchases. But I was always told to buy under the S Corp, which I have done and will change if necessary, because I can do that with a bank. So I'm just that's for safety reasons, I guess, more than anything else, being sued. I'm just wondering if there's a different avenue to take as time moves forward. I mean, you'd have a stack of checkbooks. It would be going forever.
Yeah, I mean, I think what you're speaking to is then having that additional when you get to a certain point and it makes sense to have additional corporate structures underneath each other, like James was mentioning earlier about having the S Corp and then, one or two LLCs beneath it. That's the point where maybe you do need to have some outside help, some bookkeeping, another professional that's there to help you manage, when you get to that certain level.
All right.
There's
James,
also
I don't know
there's some negative consequences of having real estate in S corporations. It can, under certain code sections, it can trigger ordinary income even if you hold it for more than a year. So there's a lot of reasons why I would strongly advise not having real estate in an S corporation. That would be my personal advice. But and certainly keeping your operating business separate from your passive real estate business. I mean, at a minimum, I don't know what you think about this. At a minimum, Ariel, I would say have your S corp for your real estate business and have an LLC for all of your real estate if it's too much to have separate LLCs. But just having those two separate, I think would, at least get you in a much better place than having it all under one umbrella.
I agree.
And the LLC is better than a trust, or the trust could be an LLC.
Well, I recommend that. I don't recommend a trust for the I recommend the LLC because you've got the statutory protection in Massachusetts. So you have to be very careful with trusts. They're not for asset protection. The presence or absence of one word, can change the function of the trust. So when you play by all the rules of the LLC, Massachusetts is granting you that statutory protection. So it's a safer approach than a trust that you may not even understand how the trust works. So I wouldn't recommend. I recommend trusts for estate planning purposes, but we can also bake that in, as I was mentioning earlier, with the LLC separately. So it's functioning for your estate planning, but not necessarily for your liability protection.
Yeah.
And back to the bookkeeping and keeping track of all your expenses. There's also RE Profit as well. That I don't know if I'm sure some of you have heard of it. One of the Keller Williams teams, one of the owners runs it, and it's all set up for you. I'm actually using it now, and it's phenomenal, especially since I'm not good at keeping track of all that stuff. It goes in and out of your bank account and you can categorize everything. So that's another option too. Awesome. Before I forget, just because we only have 10 more minutes, I added James's contact information into the chat as well as Ariel's contact information. So if you want to go into the chat there and grab it, I know it says Ames Sullivan, the J didn't get copied, but you know what his name is. So if you want to go in there and grab that information, you can do so. So James, are you taking on any new clients?
Absolutely, yes, always.
Okay. And what would someone, how do you usually handle it? Do you have someone come in with you and sit with you while you do it? Do they email you everything? Do they drop off all their documents? How do you usually work?
Yeah, so we're pretty flexible. We don't do what H&R Block does, where you come in and we'll just do it on site. But pre-pandemic, people would come in, bring in their stuff. We could talk about it, and then we work on it and get it out to you very shortly thereafter. We have a portal where people can upload to, people mail it in. So we're pretty flexible. This year, we're going to be doing, people can get the stuff to us, and we can do a Zoom call to talk about it. So we're pretty open-minded about, whatever works best for people's schedules.
Awesome. Great. Does anybody have any questions, either regarding what our topic is, or just general tax questions for James or Ariel?
Hey, Kristen, I don't see James's contact info in the chat.
I'll redo it. Usually, I guess what happens is if someone's not on when I put it on, I guess they can't see it. We've learned.
Oh, okay.
So that may
So
be
you
why.
trying to say I wasn't on?
I don't know, but I did it right at the beginning. So I don't know when exactly, but I know I did it right at the beginning. Let me get that for you.
Hey, quick shout out here, guys. Obviously James is a great CPA here, but I don't know James very well. This past year has been an incredibly challenging year on so many levels, for all of us, for everybody, but real estate attorneys especially, right? And just, I don't know, I can't think of a better real estate attorney to work with than Ariel, both professionally and personally. And, she's on here, she's a real estate attorney. I think that she even, dabbles in estate planning once in a while. She's on here talking about business law. So she's obviously one of the smartest people I've ever met in my life, but she's somebody that you can get on the phone, or you or your clients can get on the phone, and she breaks it down in such an understandable way. If you don't love the real estate attorney you're working with right now, Ariel is without a doubt, one of the best real estate attorneys that we've ever worked with, if not the best. So get her cell phone number, get her email address, and use her if you haven't. You and your clients will be very happy that you made that choice.
I agree.
Thank you so much.
I agree.
And I'll second that. I've used Ariel on multiple transactions, failed and successful, and she's always given me good advice.
Thank you. Yeah, my cell phone number is in the contact information that Kristen put in there, and that's always a way that you and your clients can reach me. So you can feel free to shoot a text message. Everybody's got my cell phone number. So I think in this business, it's all about being accessible. Most of what we do is not rocket science, but it's just about holding hands and singing Kumbaya until we get over the finish line. So it's been a privilege to work with everybody here, and Bob and Sam. I echo that completely. It's really been so wonderful to have such great partnerships this past year, because it's been a little bit of a head spinner, but I thought I was going to be doing closings in a hazmat suit. We're not there yet, but we're getting close.
Awesome.
So thank you so much. I really appreciate that.
I put James's contact information there. Let me know if you can't see it. Okay. And then awesome. And then another question: if an LLC is formed and has not been used for more than 1 year, what needs to be done?
So you basically just have to if you're like, I'm not going to use this LLC anymore, then you can dissolve it. If you don't see any purpose, or if you think you didn't use it this year, but you might use it in 6 months, I would just recommend paying the filing fee. You can always, retroactively, if you forget about it for a couple of years and you're out of your what's called not in good standing anymore, you can then go and pay, you can pay the 2 years that you missed and get back in the Commonwealth's good graces and start to use the LLC again as you need it.
Awesome. Thank you.
Welcome. It's better to keep up with it though, because nobody wants to pay like $3,000 to reboot the thing. So.
Oh my gosh. Great. Anybody else have any other questions? If not, we'll jump off and let Ariel and James get back to what they're doing today. But thank you both so much for being here. This was such a great topic and great information that you shared, so we really appreciate it. And again, if any of you have any questions, please feel free to reach out to James or Ariel. I've worked with Ariel a lot and she's fantastic, and I haven't worked with James yet, but he seems pretty awesome and very knowledgeable. So give them a call, and if you have any other general questions, feel free to reach out to me.
Absolutely.
Great.
Thank you
Thank
so
you.
much,
Thanks for having
Kristen.
Thanks, everybody. Have a great
Thank
week.
you
Thanks,
guys so
Sam.
much.
Thanks,
Have a good
James.
day.
Have a great
Bye-bye.
day.
Bye.
Bye.